The Japanese yen fell to its lowest level in 34 years against the dollar and is now trading at 115.9. Markets in the Asia-Pacific region are mixed as investors assess macroeconomic data. So let's take a look at what's moving the yen. China's combined industrial profit for January and February climbed 10.2%. Industrial profits fell 2.3% for the whole of 2023. Data from Australia showed consumer price inflation in February rising 3.4% year over year. And in Japan, the currency is plummeting, and officials have been issuing strongly worded statements, with Finance Minister Shunichi Suzuki saying the country won't rule out any step to respond to disorderly FX moves. Let's now speak to Naeem Aslam. He is the Chief Investment Officer at Zay Capital Markets, and he joins us now from London. Great to have you on the programme with us, Naeem. So what does it mean that officials in Japan said they are ready to step in and support the currency? What does this mean practically?
Sure. Thanks for having me. Look, I think there are a number of factors which are playing over here. Number one is, of course, Japan is coming out of its dovish monetary policy after 8 years. So significant volatility in the market with respect to its currency was very much expected. So what we really need is, from the fiscal side and from the monetary policy side, a lot more stability, a lot more clear message, a bit of a balanced message as well, because slow and steady will only help them to come out of their ultra dovish monetary policy, which they had for nearly a decade now. Now, if the bank will come and then they say, you know what, we give signals like how they are giving signals today. Of course, investors and traders, they will say, okay, maybe the Bank of Japan and then the monetary policy, they're going to make a U-turn, and that will hurt their reputation further, and that will have a further significant volatility in the market. So what the monetary policy holders, what the finance ministers, what they need to do is make sure that they deliver the message in a very calibrated way, and slow and steady should be the way for them to come out of their ultra dovish monetary policy.
Interesting. As you say, the country is coming out of 8 years of ultra loose monetary policy, but it just fell into recession, although some analysts are really saying that this will be a shallow recession. Why? Do you agree?
Well, look, recession is something what is expected, especially when a country comes out of this long period of dovish monetary policy, because investors and traders, they are addicted to loose monetary policy or dovish monetary policy. But if we look at the overall performance of the economic data, there isn't really anything crying out which is going to say that yes, that the country is heading towards hard landing, or country is going to have some real serious problem with respect to its economic data. But having said that, we do need to keep a very close eye on economic numbers. We do need to see how consumer confidence is doing. We do need to see how much of an impact it is having on its GDP growth and other service which will come out in the next quarter or so. But I think, yes, there will be a period of a slowdown in economic activity, but nothing substantial yet. But it is a matter where you need to keep your finger on the pulse.
Interesting. One point on Australia, the fact that Australia's inflation is coming down, is this going to impact growth in certain countries in Asia, such as China and Japan? We know that Australia's is really trading significant volumes with China, for instance. What do you expect?
Yes, sure. So I think there are odds there, but they're nothing of a substantial value, because what really matters over here is that, okay, how Chinese economy is performing, how that data is coming out. So I think as long as we continue to see support from the PBOC, which we are seeing, the People Bank of China, we should not be too much worried about that. And in terms of an inflation trend, the one that you're referring to, if you look at the inflation trend in the US, or if you look at in other developed countries, we have seen a little bit rebound. So when we are talking about inflation, I think in the coming quarters, we will see some readjustment in those expectations, where central banks had them previously, what the inflation numbers should be.
Naeem Aslam, thank you very much for your analysis.
Thank you for having me.
And now let's take a quick look at some of the top stories from around the world. Two of the world's largest credit card networks, Visa and MasterCard, have agreed to settle a decades-long antitrust case brought by merchants. The settlement is set to lower swipe fees merchants pay when customers make purchases using their Visa or MasterCard by $30 billion over 5 years. The settlement only applies to US merchants for now. Hyundai says it plans to invest more than $50 billion in South Korea by 2026 to strengthen its competitiveness in the EV market. Along with its affiliate Kia, Hyundai is the world's third largest automaker by sales, but it lags in the electric sector. Hyundai is aiming to boost electric car production to more than 3.6 million units by 2030. And for the first time in almost 30 years, part of Donald Trump's business empire has gone public. The Trump Media and Technology Group soared in the first minutes of its Nasdaq debut, triggering a brief trading halt on volatility. Shares surged past $70 billion in early trade, giving the firm a market value of more than $9 billion. They ended the day at about $58. That's still up more than 16%. And French President Emmanuel Macron and his Brazilian counterpart Lula da Silva have announced they plan to invest $1.1 billion in the Amazon. The money will be spread over the next 4 years to protect the rainforest. On Tuesday, the leaders met in the capital of the Amazonian state of Pará to restore ties that frayed during Jair Bolsonaro's presidency.